Hi, I'm Jake Scott.
And I'm Pretoria Scott.
Uh-oh, I'm looking at the wrong place. Let's go here. Hi, I'm Jake
Daddy!
Scott. No, but I have to look there, right?
Everyone has to look there.
Hi, I'm Jake Scott.
And I'm Pretoria Scott.
I am a sole proprietor.
And why'd you do that? You said, and I was
okay. I'm sorry.
Be proper.
Hi, I'm Jake Scott.
And I'm Pretoria Scott.
I am a sole proprietor.
And I am a child employee.
Good job, sweetie.
E.
Okay, so I need to warn you all that I'm about to start speaking about numbers. Please do not fade out, okay? So let's take a scenario. This is a married couple making $50,000 each. The standard deduction is $12,000 per person, which gives them a total of $24,000. Their taxable income, therefore, is $76,000. Now, in the U.S., we have a graduated tax scale. That means your first portion of their income, their first $19,000 basically, is taxed at 10%. Anything above that, that falls between the range of $19,000 and $77,000, is taxed at 12%, and so on. So if they made, anywhere between $77,000 and $165,000, that portion that is between that range will be taxed at 22%. Okay, so this couple, their taxable income is $76,000. This portion is $1,905. Then the portion that went to this bracket ended up being $6,834 for a total tax liability of $8,739. Well, what our goal is to get that number down, so we help you to start a business. When you start a business, basically before this taxable income is calculated, even before these numbers are considered, your business comes first. And so let's say you had 2 child employees at $12,000 each, $24,000 total. You have some office expenses, perhaps equipment, mileage, commissions. All these are things that one opens themselves up to when they have a business. And let's say this is pretty moderate, $25,360 worth of losses in their business. So they may have made a little income, but they had, for the first couple of years, they had losses of $25,360. Well, this is the scenario without the business. Well, with this business, remember, this happens before your income is considered. So now you're starting off in the red, $25,360 because of your business and your business deductions. Now you're at negative $25,000. From your job, you have $50,000. Your spouse had $50,000. So now you still get your standard deduction that still applies, and your taxable income all of a sudden is $50,640. So now we go over here. Your first $19,000 gets taxed at 10%. So see, those numbers are the same. This guy and this guy, those are the same. And then that $50,000, the rest of that landed in between this range gets taxed at 12%. Okay, for a total of $3,791. for a total tax liability of $5,696. Okay? That's the most important thing. If you focus on the yellow boxes, right? The yellow boxes, your first your tax liability would have been $8,000, but now because there is a business and a business write-offs, all of a sudden now the tax liability was decreased by over $2,000. Okay? So hopefully that was clear and not overwhelming. I'm going to follow it up with a real life example. This is a client that we just came on board this year. Their taxes were done. It's a married couple. They have 3 children. Their total income was $81,725. They actually have a side business of cutting grass. So after some conversation, I talked to them. They had done their taxes and their refund was only going to be $184. But I asked them some questions. Do your kids ever go out with you to cut the grass? Blah, blah, blah. Of their 3 kids, they said, okay, let's just hire 2 of the kids. And that brought their taxable income down to $66,000. Okay? Which decreased their tax liability. So here their total tax is $3,221. Over here, their tax was $4,991. So you see the difference. Now this was what was taken out of their paychecks, $5,175. So now the difference is their tax refund. So this is, instead of them getting $184, now their tax return is $1,954. Because of their situation, we were actually able to do this year. So we actually called, got them a tax ID number, got them registered with the state, and they were able to take advantage of this for the 2019 return.